Welcome back. You're watching Commodity Champions. Talk back with us, and we have with us Jonathan Bharat, CEO at bharatsbulletin.com. Feroz Aziz is Deputy CEO at Anand Rathi Financial Services, and we also still have with us Kunal Shah, Head of Commodities at Nirmal Bang Commodities. Well, we have a question coming in from a Twitter user, Sachin Shah, and he's asking if it is time to segregate steel from other metals. Remember, it all has been about steel prices running up to 5-year highs, and that's been taking the other metals higher with it. And now, of course, with China warnings coming in, we've seen the steel prices and the iron ore prices decline quite sharply. Kunal, would you want to take that on? Because the base metals have had an immense run in last 3 weeks, and today perhaps was a much needed profit taking or a pause.
Yeah, but you cannot generalize. So if you expect that base metals are going to move up from here, it has to be a metal which is more strong fundamentally. So I am not expecting copper to move up exponentially from present levels. So the upside in copper looks limited right now. And with the announcement of 3.5 million tons of capacity likely to go down from Shandong for aluminum, I believe aluminum is bullish. So it's going to be a metal specific. You have to be very selective if you are going long. So copper, I think the profit taking is on the cards, and on the other hand, aluminum still looks strong with 7-8% capacity, global capacity likely to go off from the market, especially from China. It looks very promising and very attractive. So I think that even if steel prices corrects or iron ore corrects, it won't have much impact on the price of aluminum, and aluminum is likely to go up further. So 128.29 on MCX, good levels to go along. Upside target 134, 135 is something what we are expecting, and copper 414, 415 should hold right now and should come down to 401.
All right, so still bullish in case of metals there, and that's exactly what Jonathan was also telling us a few minutes back on how he's very bullish when it comes to aluminum in that space. But Feroz, how would an ideal portfolio look for you? What would you advise? How much of an equity, bond, inflation, concept into it, and commodities, of course? Because when you look at equities or commodities, there is various sectors to it, and various global and domestic markets impact there.
See, I think if you allocate the portfolio from a well-diversified portfolio perspective, I think even today, 40 to 50% selected equity should form a part of the core portion of one's portfolio. Like we discussed, 20% could be precious metal, which will have some degree of dollar exposure, which will bring in, from an Indian investor's perspective, some degree of currency hedge, which acts very well during geopolitical uncertainties. And then you have the metal underlying price, so 20-25% there, and the other 25-30% still in the debt market, because if you look at how we have shaped up from the interest rate perspective, I don't think the fall has been as sharp as it was envisaged a couple of years back. So there is a lot of interest accrual to be made. And then what happens is in times of transformation in the economy, you would also see credit upgrades. So there would be some kind of debt papers which will get you a mark-to-market gain because of the ratings going up for those corporates. So selective corporate bonds, equities 40-50%, and a 20-25% of dollar exposure underlying having precious metal as the underlying instrument.
Well, that is well taken, because the currency has been very, very volatile as well, has been taking in a lot of geopolitical concerns and political uncertainty as well, and that's yet another thing that tends to impact all the other asset classes. But we have one more viewer query, and Anand Shah has written to us on Facebook, and he wants to know the view on nickel prices. Well, nickel, of course, has been the best performer in last 1 week, up by nearly 7% and 14% of gains coming in last 1 month as well. Kunal, would you want to take that on? And after this tremendous rally that we've seen in this one, are you looking at further gains?
Well, in currency also, the overall trend seems to be bullish. It's just a temporary pause what we are seeing because of the ongoing geopolitical conflict between US and North Korea. And I believe that, like I said, for bullions, the moment there is some de-escalation of this geopolitical crisis, the uptrend should again resume. So there is no change in the domestic fundamentals, which sounds bullish, with inflation at all-time low level, with the infra push going on in our country, the robust inflow coming in our country. The overall trend still seems to me bullish, and I think the maximum upside for the USD-INR pair is pegged till 65. I don't expect USD-INR to move above 65, and from there it should again start gradually drifting lower.
Another viewer, Virendra Kilkile, has written to us yet again on Facebook, and he wants to know the view on steel going forward from here. Well, remember, China has been producing steel at record highs, but it's the capacity cuts because of environment, illegal, and of course, for the low-grade steel that has pushed the prices higher by 40% this year. Kunal, you want to take that on? With 40% gains already in for steel prices, the underlying commodity, what is your sense from here on?
Well, it's not going to go down significantly. You have to understand the importance of the Chinese government intention. The intentions are very clear. At any cost, they don't want their citizens to suffer from the pollution. And all the closed steel plants, it will take a lot of time to restart new plants, to accommodate the entire plants from one place to another and start the production from there. So it's a long process. For the time being, still look bullish. After a humongous gain, same profit taking can be very welcome, but the overall trend in steel seems to me bullish. So Chinese, I think the comments what they passed today led to some profit taking, but overall trend still very bullish for steel.
Precious metals or base metals, you can continue to hold your longs, create longs as well, as the view coming in from our experts to all the queries that we got today. But Firoz, I would want to come back on a point that Jonathan was making earlier, that we have seen the equity markets run up a lot, and the next couple of weeks perhaps it is going to be commodities that would actually be the major piece of the pie there. So when you come out with that ideal portfolio, is there a timeline to it? Because the world is changing so fast. So is there a need to keep changing, looking at the various cues that we get from markets?
See, I think that's a very valid question. If you have an allocation, how long should you not review that allocation? I think the first most important thing is divide your portfolio into two components. One is the core portion of your portfolio, which of course the asset allocation which I mentioned is relevant to. Then you have a tactical portion which requires far more monitoring. The frequency of monitoring on the tactical portion should be as high as 15 days. And the one which is the core portfolio, the lesser you disturb it, the better it is. And that's the allocation which I was speaking of. From a tactical standpoint, your agility has to be far more superior, and that frequency should be 15 days. So the portfolio of 50 equity, 25 precious metal, and 25 selective corporate debt is from almost about a 1-year perspective. The tactical portions require a 15-day review.
All right, so 15 days to 1 year, depending on what you're holding. So next 15 days, it clearly is about commodities, Firoz, and Kunal and Jonathan is what we understand from all of you. And that is perhaps the way to go forward. Thank you, gentlemen, so much for coming by, answering all of those queries and giving your opinion as well. But with that, it's a wrap up on this edition of Commodity Champions Talk Back. Thank you for watching.